Good morning. This is Japanese Economic Review Channel. Yesterday, March 16, 2026, the global financial markets underwent a significant period of contagion and volatility. The Nikkei 225 index suffered a steep decline, closing the morning session down 681 points at 53,138.00. This retrospective look at yesterday's session highlights a pervasive risk-off sentiment that initially spread from Wall Street and was severely exacerbated by geopolitical triggers throughout the day. The epicenter of yesterday's turmoil remained firmly in the Middle East. News of the U.S. Defense Department dispatching additional naval fleets and threats of strikes against Iran pushed NY crude oil futures toward the critical $100 per barrel mark. A definitive trigger for the sell-off occurred at 11:28 a.m. when breaking news confirmed that Dubai International Airport had temporarily halted operations, signaling severe logistical distress and reigniting global inflation fears. Yesterday's session was heavily influenced by the negative momentum established during Friday's Wall Street close. U.S. tech giants including Salesforce, Apple, and Nvidia bore the brunt of a high-volume sell-off as investors repriced assets amid rising inflation expectations. One notable anomaly yesterday was the mobile payment application PayPay, which managed to buck the broader macro tide and surge despite the overwhelming market pressure. The Tokyo market's performance yesterday followed a clear timeline of descent. Opening with a sharp gap down, the Nikkei immediately priced in the weekend's oil spikes and the U.S. tech rout. Brief algorithmic attempts to rally mid-morning were quickly suppressed by relentless selling pressure. The situation worsened significantly following the Dubai catalyst late in the morning, leading the index to stabilize at a morning low of 53,113. Sector rotation yesterday revealed a desperate flight to safety. Capital exited global cyclical sectors and rate-sensitive tech like Hitachi and Advantest, seeking shelter in inflation-resilient domestic staples. Defensive havens like Nippon Ham and Nishui saw gains as investors prioritized stability. A key insight from yesterday was that even energy companies like INEOS struggled, as the market feared that rising costs would ultimately outweigh the benefits of higher oil prices. Despite the broad index drops, several companies demonstrated corporate resilience through strategic actions announced yesterday. Sakai Moving Service launched autonomous truck trials to address logistics challenges, while Fujikura delivered an advanced submarine to the Ministry of Defense. Furthermore, Fujifilm's strategic investment in VALANX underscored a continued commitment to long-term biotech growth, proving that specific value drivers can decouple from the broader geopolitical cycle. Reflecting on the events of March 16th, we enter today with three key takeaways. First, the return of inflationary pressure as oil nears $100 has forced a repricing of near-term interest rate expectations. Second, the tech sector remains highly vulnerable to valuation repricing. Finally, institutional capital is likely to remain in a defensive posture, favoring essential staples until definitive geopolitical clarity regarding the U.S. and Iran is achieved. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.